Hello everybody, my name is Alesh Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is my weekly thoughts on market happenings for the week ending January 21st, 2022. Looking at the indexes for the week, the TSX, the S&P 500, and the Dow Jones are all down for the week, with oil basically flat around $84. NASDAQ took a beating, down 7.6% for the week, and is easily in correction territory since a recent November high. Couple more bad days, and NASDAQ is going to be in the bear market territory. The latest quarterly report from MNP is painting a bleak picture of Canadians' financial flexibility to deal with basic life expenses, let alone the unexpected. 55% of respondents to the survey said they can comfortably cover the cost of living this year, down 5% from the prior survey. Meanwhile, more than 4 in 10 respondents, 43%, said they're concerned about their debt levels, which makes you wonder about the consequences of what happens when Bank of Canada raises rates. Keep in mind that the central bank's mandates are to target inflation, and recently added for Bank of Canada, targeting employment. They are not officially concerned with people or governments being able to pay their debts or what the stock market thinks. In the face of slowing growth, the People's Bank of China cut a key interest rate Monday overnight for the first time since early in the pandemic. The looser policy comes as fresh data show the country's economy grew 4% year over year in the fourth quarter, down almost a full percentage point from the third quarter. This will also prop up the real estate market. Nonetheless, China's full-year growth of 8.1% still makes it the envy of developed economies. This is all because China is in a loosening cycle while everyone else is in tightening mode. China getting past COVID before everyone else means that they are in a different part of the economic cycle as well. As far as the new Omicron strain in China, it's unlikely there will be complete lockdowns again in China like there were at the beginning of 2020. There's volatility in the markets this week due to the US and possibly Canadian central banks being behind in increasing interest rates and starting soon. At the same time, the US Fed will be slowing and stopping the government bond purchases they have been making. The bonds the central banks have will get sold eventually, increasing the fixed rate interest rates as well. The stock market volatility and the downtrend is likely to continue because a lot of the downside is on the expectation of increasing interest rates. But once the increases actually start to happen, the market will sell off even more, especially the technology-rich NASDAQ. In other news, on Tuesday, Microsoft purchased Activision Blizzard Entertainment for $68.7 billion. And as a part of that, Microsoft wants to define the metaverse for us. On Thursday, oil hit a 7-year high, which is looking good for energy stocks. And on Wednesday, Statistics Canada said the consumer price index in December was up 4.8% annualized compared with a year ago, its highest point since 1991. So inflation is still with us, and that is going to lead us into the Bank of Canada raising interest rates. On Thursday, the US released its initial jobless claims, and they came in at 286,000, well above the 225,000 that was expected. Next week is going to be interesting. US earnings will continue. Microsoft releases its earnings on Tuesday, Tesla Wednesday, Visa and MasterCard on Thursday, and Canada is starting with the Canadian National Rail on Tuesday and CP Rail on Thursday. Both Canada and US central banks released their interest rate decisions on Wednesday, January the 26th. With Canada releasing the decision in the morning and the US Fed after the market closes on Wednesday. I think Canada will raise first, and the bond market is giving it a 70% chance of being next week. It'll be an interesting January 26th. I personally think Canada is likely to wait until March and then raise every second meeting for four increasing of a quarter of a percent each time. Each move will be telegraphed and data dependent. Because interest rates are exceptionally low in Canada, the raising is likely to continue with another two or three increases in 2023. That has been my summary for the week. If you have any requests on what you'd like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.